stock market is crashing and panic is spreading like wildfire. Headlines are screaming total collapse. Social media is in full meltdown mode, and investors are scrambling to sell before it gets worse. But what if I told you this panic might be exactly what someone wants? Everywhere you look, the message is the same. Get out now before it's too late. But take a step back. Is this really just another market downturn? Or is there something bigger happening behind the scenes? Because when you follow the money, three massive forces are driving this chaos: Trump's trade war, NATO instability, and a hidden strategy that could explain everything. Before you make a decision that could cost you thousands, let's break it all down, starting with the one thing that's already hitting your wallet the hardest. If you've been watching the news, you already know Trump has reignited a full-scale trade war. And it's not just about political posturing. This is directly impacting the stock market and, more importantly, your bank account. Back in the 1930s, the US government passed the Smoot-Hawley Tariff Act, imposing massive taxes on foreign goods to protect American businesses. Sounds good in theory, right? Except it backfired big time. Other countries retaliated, trade collapsed, businesses shut down, and millions of Americans lost their jobs. It took years for the economy to recover, and that policy helped push the US straight into the Great Depression. Now history might be repeating itself. Let's talk about what's actually happening right now. In February 2025, Trump announced a 10% tariff on Canadian energy imports and a 25% tariff on other Canadian goods. Canada immediately fought back, hitting the US with its own 25% tariffs on American products. Then in March, Ontario raised the stakes, adding a 25% surcharge on electricity exports to states like New York, Michigan, and Minnesota. But Trump didn't back down. Instead of easing tensions, he escalated the fight, raising tariffs on Canadian steel and aluminum to 50%. And that's when things really started to spiral. The market reaction was immediate. Stock prices tumbled. Businesses that rely on imported materials, automakers, construction firms, appliance manufacturers, all saw their costs spike overnight. And guess what? Those companies aren't absorbing the extra cost. They're passing it on to you. That means more expensive cars, higher grocery prices, and an overall higher cost of living. Inflation is already pushing budgets to the limit, and now it's getting even worse. And here's where it gets even more concerning. Trump's tariffs aren't just hurting consumers. They're causing a global shift that could reshape the US economy for years to come. Other countries aren't just standing by while Trump plays hardball. They're forming new trade alliances, and the biggest threat to the US economy right now? The BRICS alliance. China is leading the charge, working with Russia, India, Brazil, and South Africa to cut reliance on American trade. If this trend continues, it could leave the US isolated while other countries develop new supply chains, pricing the US out of key markets. Translation? If the world stops buying from the US, the market panic we're seeing right now could just be the beginning. Trump's trade war isn't just a policy decision. It's actively fueling inflation, driving up costs, and creating uncertainty in the stock market. And the more uncertainty there is, the more panic spreads. But tariffs aren't the only thing shaking the markets. Trump's stance on NATO is creating even bigger uncertainty. And that's what we'll break down next. The trade war is already fueling panic, but it's not the only thing shaking the stock market. There's another factor creating uncertainty: Trump's stance on NATO. And while it may seem like a political issue, it's directly affecting global stability, which means investors are getting nervous. For decades, NATO has been the backbone of Western security, a military alliance designed to protect its member nations. The US has historically played a leading role, providing both funding and military support. But Trump has made it clear he doesn't think America should foot the bill unless other countries start paying more. And here's where things get complicated. In early 2025, Trump openly questioned whether the US should continue defending NATO allies if they weren't willing to increase their contributions. That might sound like a reasonable argument, but to global investors, it signaled something else: uncertainty. Because if the US steps back from NATO, it could create a power vacuum. And history has shown that when one power pulls away, another steps in to take its place. Russia and China have been waiting for an opportunity like this. If NATO weakens, Russia could feel emboldened to push further into Europe, testing the limits of Western alliances. China, on the other hand, could expand its influence in the Indo-Pacific region, forming stronger economic and military ties with nations that used to rely on the U.S. market's hate unpredictability. The second investors sense that world stability is at risk, they start pulling out of stocks tied to global trade, defense, and major multinational companies. And that's exactly what's happening right now. And here's the problem. Whether Trump follows through with these threats or not, the damage is already being done. The mere possibility of NATO instability is enough to shake investor confidence. But what if this isn't just political posturing? What if Trump is using market instability as a strategy? Because there's a theory going around that he might actually want this panic to happen. And the reason? Interest rates. Trump has never been a fan of high interest rates. He's openly attacked the Federal Reserve for keeping them high. And here's where it gets interesting. The Federal Reserve is independent, meaning Trump can't just tell them to cut interest rates, but their decisions are based on economic conditions. If the stock market crashes and a recession seems inevitable, the Fed has no choice but to step in and slash interest rates to prevent a total meltdown. And that could be exactly what Trump wants. Because high interest rates slow down the economy. Businesses borrow less, stock prices struggle, people stop spending as much. And for Trump, who prides himself on economic growth and hates anything that makes America look weak, high interest rates are a major problem. Right now, the U.S. government is carrying a staggering $36.5 trillion in debt. And when interest rates are high, the cost of that debt skyrockets. If the Fed lowers interest rates, the government can refinance its debt at a cheaper rate, saving billions in interest payments. And this wouldn't be the first time something like this has happened. If the market panic forces the Fed to cut rates, it could lead to a massive rebound later. And if Trump can take credit for stabilizing the economy after a crash, it could go down as one of the most calculated financial moves in history. But if this is his plan, it comes with a major risk. The uncertainty he's creating is making investors anxious. The stock market isn't just reacting to tariffs or NATO instability, it's reacting to the unknown. And in investing, uncertainty is one of the biggest killers of confidence. Right now, panic is spreading. But for smart investors, this could be a once-in-a-lifetime opportunity. The market is driven by emotions, fear and greed. Right now, fear is controlling everything. But the investors who ignore the panic, who understand that downturns are temporary, and who take advantage of lower prices, are the ones who will come out on top when the market rebounds. Because one thing is certain, this crash won't last forever. And when the market bounces back, the ones who made the smartest moves now will be the ones reaping the biggest rewards. Do you think Trump is engineering this crash on purpose? Let me know in the comments. And if you want to know more about how to invest during a downturn, watch this video next.